You have such large short positions, that can be a very big problem. You get short squeezes, then you really get prices moving in a vertical parabolic fashion. Nickel's a good example, except they basically reversed all the transactions, and as far as I'm concerned, LBMA lost all credibility when they did that. But that's what happens when you mess with Mother Nature and you suppress all of these things for, ill intent. The markets need to operate freely. Free markets seem to find equilibrium where they should be. When you suppress the freedom in free markets and allow these distortions to happen, that's why all manipulations end badly. You can only suppress a price or manipulate a market for a long extended period of time by pushing it in the direction that it is going. And if it starts to move the other way and you're still trying to cling to the same program that you've done in the past, that's when things get very dangerous. And that's where we are right now. We're beginning to see accumulation by the big money quietly start to translate into higher prices at a time when the public is still completely and totally asleep at the switch. Same thing we're seeing in platinum. That's kind of been quiet, but it's interesting because platinum and silver, which have both done very well, have now been reclassified as critical minerals by the government. And so it's almost like it's the Treasury preparing to stockpile again. We've talked a lot about platinum or silver and the shortage, but the Japanese guy who's the head of the Tocom exchange has come out and said there's no platinum available in London or Switzerland, yet they're trading 3 million ounces of spot contracts deliverable per day. Well, that's also been classified as critical. So I would expect hoarding of both platinum and silver. I think what the U.S. is realizing that these are national priorities. We've talked about that. Someone got into his ear and said, this is what the BRICS are doing. We better do the same thing. And then you look at the way that some countries are reacting right now. As right at the same time U.S. declares silver as a national priority, you have Saudi Arabia buy a bunch in SLV. You see India's demand of silver is up 431% year over year in May, and record ETF inflows in June despite higher prices. So yeah, there's a lot of demand for physical metal that hasn't translated into the retail side of it yet, but the rest of the world, the big money, whether it be on the exchanges or the central banks or the sovereign wealth funds, are making it very clear that silver and gold are quite significant, and platinum, to their plans moving forward.
Silver's transformation from a niche commodity to a pivotal industrial asset is accelerating. Its inclusion on the U.S. critical minerals list prioritizes it alongside copper and lithium, essential materials for energy, defense, and technology. Similarly, platinum is quietly gaining recognition. In India, silver imports surged by 431% year-on-year in May 2025, while demand across sectors like solar, electronics, and EVs continues to climb. This reflects a broader, geopolitically driven demand that underscores its dual value, both utilitarian and monetary.
When you see 8 Western banks, and I'll talk about Ed Steer's chart again that you showed several months ago, when you see 8 Western banks that maintain the largest concentrated position of any commodity ever traded on COMEX, it's not to hold down the price. Well, it is, but it's not price that's bothering them because silver is inelastic. You don't need a lot to make a very expensive item. Even if it's 500 ounces in a Tomahawk cruise missile that costs millions and millions of dollars, or a fifth of or a sixth or eighth of an ounce in an iPhone, the cost of the finished product is so much higher than the little incremental price of silver. It doesn't matter. More along the lines of they've tried to step on it because rising price would attract demand, and there's not enough availability of it. The price has been skewed by the trading on COMEX and the LBMA. It's real value skewed, and so I think the rising price would attract investors, speculators. They don't want that. It's more along the lines of being able to access stockpiles of silver rather than the cost of the silver. I know that sounds kind of strange, but if you're making it for all of these critical components, it's less about the price and more about the availability because it's used in such small amounts in whatever the finished product is. But you're right. It has been suppressed. It has been held down. It has been manipulated. And I think now there's a race to accumulate it because indeed it is strategic. It is critical. It is needed not just in electronics and electrical components, just about anything that conducts electricity. It is needed in military components. It is needed in medical devices. It is needed in so many places, solar panels, etc. And that plurality of demand, from monetary demand to military demand to industrial demand, makes it strategic, every bit as strategic as any of these other strategic metals. And I think that's the change, is that Trump understands it, his administration understands it. So, this is something I think that will continue, and there will be at some point, I see a battle between the industrials and the, or shall I say, the manufacturers, the producers who need it, and the investors. So you're going to get companies like Tesla and Panasonic and Sony and whatnot in a battle for what's available. As the hedge funds and the investors start to take the other side, they're going to battle, and it's about availability of a depleting asset. It's not as much about the price, but just about the availability. And you start to wake everyone up just like that. It disappears. And what is a shortage on COMEX spills into a shortage globally across the board into retail as well. Not there yet. There's still great values, but I see that happening as where this ultimately goes to.
Industrial demand for silver is soaring, while supply has failed to keep pace. Global deficits have persisted throughout the early 2020s, with cumulative shortfalls now nearing 800 million ounces, a structural imbalance that fuels a bullish outlook. In India, silver has returned an impressive 36% in 2025, outpacing gold and drawing investors toward bars, coins, and ETFs. Across the globe, retail interest continues to build, despite high prices. In India, for example, silver ETFs attracted record inflows in June, even amid soaring prices.
You have such large short positions, that can be a very big problem. You get short squeezes, then you really get prices moving in a vertical parabolic fashion. Nickel's a good example, except they basically reversed all the transactions, and as far as I'm concerned, LBMA lost all credibility when they did that. But that's what happens when you mess with Mother Nature and you suppress all of these things for, ill intent. The markets need to operate freely. Free markets seem to find equilibrium where they should be. When you suppress the freedom in free markets and allow these distortions to happen, that's why all manipulations end badly. You can only suppress a price or manipulate a market for a long extended period of time by pushing it in the direction that it is going. And if it starts to move the other way and you're still trying to cling to the same program that you've done in the past, that's when things get very dangerous. And that's where we are right now. I would argue that will end badly, and you'll see prices go much higher. You'll see whether it be hedge funds or commercial banks go under as a result of their stupidity to short all of these. It's an existential threat. One could argue this is what put Bear Stearns out of business. So to me, you just play the long game, and it's been a long, arduous journey to where we are now. But if I would have told people, a year ago that we'll be staring at $42, in early, mid-2025, I think most people would have been happy about that. Quite frankly, I think it's just beginning. We're a long ways away from seeing where this ultimately stops, but this is where it should have been a long time ago, and I think it's still got a lot of room to run based upon everything that I'm seeing, whether it be anecdotally or economically, or just by the movements of the biggest players in the world, with Russia and India and Saudi Arabia and China. They're all gobbling up silver as fast as they can. Evidently, so are the folks in the United States now, too, at least on the COMEX. When that translates to the retail side, which I believe it will, something will wake up the public, that's when we'll see real fireworks. And of course, we're not there yet, but that's a benefit to all of you who are trying to add to your portfolio before the prices get out of hand.
Behind the scenes, exchange structures like COMEX and LBMA have long exerted influence over metal prices, sometimes suppressing them to avoid triggering broad retail participation. Today, however, mounting demand and dwindling inventories are limiting their control. Analysts warn that low liquidity and thin, freely traded inventories could set the stage for a sharp upward move, especially if even a modest surge in demand triggers a squeeze.
I think a real bull market is one that continues to move up gradually, kind of like what we're seeing here. I would argue the difference right now between this market and ones in past is the corrections. The corrections are nowhere near what they were before, where you would see a correction and the price would get stepped on and go lower and lower and lower, wouldn't come back, like in 2011. The corrections that we are seeing now are very shallow. While they can be steep, they don't last very long, and the price comes right back. That is an underlying reality of physical demand at the highest levels. What's unusual about this one is the price. If you would have told me gold would be at $3,500, and most people wouldn't know a gold eagle if it fell on their foot, is shocking to me, which tells me we're very early yet in this bull market, but a price that continues to move higher without gaining any attention, to me, is very bullish, because it's the biggest money in the world that is pushing it higher as the public is moving it completely and totally lockstep in the other direction. It's, to me, very, very bullish and a contrarian indicator that this is indeed happening.
The scramble for silver and platinum is not merely economic, it's strategic. Nations like Saudi Arabia are increasing exposure via ETF purchases, while multinational demand from India, China, and the US continues to climb. Silver's conductance properties make it invaluable for solar panels, electronics, defense systems, and medical technologies, making it a linchpin of modern industrial and national security infrastructures.
Uninformed and hypocritical, because these are the same people that are all in equities at all-time highs, at the highest valuation since the 1929 crash, held up by 7 stocks, where the rest of the stocks in total are barely up at all on the Russell 2000. It's just naive as far as I'm concerned. And it's the fact that people don't understand that, yes, gold is at all-time highs or damn well near it, but because of overt suppression to make the dollar and the bond market look better than it is, or they are, no one knows how high gold and silver should be. But this is exactly the sentiment you would want if you're already positioned, because this is why so few investors ever make money. They miss the important part of the equation. The fundamentals they don't understand, and they just look at price, which is the ultimate tool of misdirection. That's why they do it. The big money knows that they can mess with the price and everyone else just keeps on walking. The people who understand value, understand math, understand logic, they take the time to apply it to this thesis, to this idea, would walk away saying, yeah, that's exactly why the big money is accumulating it quietly. This is the don't do as I say, do as I do. I would say that those people who are making that assessment are making a very foolish and ill-informed, hasty appraisal of the situation.
Now, with institutional accumulation gaining traction, markets appear to be approaching a watershed moment. In 2025, silver prices have surged past $40 per ounce, marking a 14-year high. Yet retail demand in regions like Europe and the US lags, offering a gap between investor enthusiasm and public awareness. If investor-driven demand meets tightening supply, a pronounced rally, or even a parabolic spike, could follow. This is a story unfolding, strategic, structural, and still under the radar, destined to draw attention soon.
They don't have any idea either. I mean, the market continues to move higher, and, it's without any regard for risk, or risk of prevention or aversion. So I think that the pensions are in very big trouble. I mean, where do they get their yield? They're forced into the equity market because they're not getting it in the bond market. They're forced into the equity markets at all-time highs, at all-time valuations. And I think this in and of itself is scary because, I believe that there, especially if we see a decrease in yield or rates, you got valuations at literally 1929 style extremes. You got all of the insiders, the veterans, Gartham and Buffett and Dalio, they're all talking of highlighting systemic risk. You have insiders selling, as we've talked about, the industrials, or the institutionals rather, Bezos and Zuckerberg unloading billions in stock. And I just think that this is a very, very dangerous time where the insiders are moving out, but the hedge fund or the pension funds don't have much choice but to speculate. They're not getting the return that they had thought they would with treasuries or had hoped for, so they have to, at that point, speculate into the equity markets, as some of the most informed money in the world is moving in the other direction. And buying gold, which doesn't pay a coupon, even though it's outperformed everything, they won't even look at it. They won't even think about it. So it's putting a lot of people and their future in trouble, in jeopardy. I look for the pensions and to have before it's all said and done, the pensions will be something that you hear a lot more about, just simply because they are forced to take chances in order to get the returns that people are counting on. So yeah, they're not involved in this at all. They're not involved in any commodities because they don't pay a yield. They don't pay a return. So that's off the table as far as I'm concerned.